Next session, we have a presentation by Dr. Luca Marighetti. The topic is on reimagining insurance with big data. Dr. Luca, with over 30 years of experience in large variety of industries in geopolitical matters and in technology, he held a number of roles, first in academia, then at Procter & Gamble and S.C. Johnson, McKinsey & Company, Deutsche Bank, Allianz Group, and Zurich Insurance. Dr. Luca, over to you.
Good afternoon. Thank you for having me here. And really, I tried to be a bit more specific in the title of my presentation. Because really, what we're talking about here is what insurance and tech, and better said, the combination of the two, can actually do to improve the world. In a sense, that's how I understand insurtech. Insurtech is not a few small startups taking on against insurance incumbents. That's boring. And it's not going to happen anyway, because insurance is a very complicated business. You need a lot of kind of background and knowledge and so on in order to be able to do that. However, tech will really change the way insurance is delivered, and I'm going to talk a little bit about that. So maybe one word about my title, Group Head Tech Transformation. We do things very differently at Swiss Re than what you probably know from the rest of the industry. We have banned the word disruption from our vocabulary. We have closed down the incubator, accelerator, and the like that we had, and we don't have an innovation team. So the innovation team, why? Because it didn't work. So if somebody asks me, how large is your innovation team? My answer is 14,500. Everybody in the company is now tasked with innovation, and we are helping people to learn how to do it. Anyway, so why did I choose this picture? This picture is depicting an historical event. It was the earthquake of Lisbon in 1755. So that event was something in the magnitude of around 8.5 to 9 on the Richter scale, and to any estimates, about 100 people died in one night. It was a combination of a major earthquake, fire, and a tsunami. So until then, people in Europe thought, humanity would be living in the best possible world. God has created the best possible world, and everything is kind of, if not perfect, almost perfect. And then this happened, and that changed the perception. And people thought, hey, wait a second, the world is not perfect. The world actually has an engineering problem, and we need to fix it. So that's why things like, not only from there, but that reinforced the movement that actually led to things like the Industrial Revolution, engineering, science, and the like. Now, what does it mean? What do I mean when I say that the world is badly engineered? Really what I'm talking about is that things can go wrong, actually go wrong all the time. And there are a number of sources from where those damages actually emerge. We call them risk. So one risk is, an obvious one is natural catastrophes. That risk is actually increasing because of climate change. And it doesn't really matter whether the climate change is man-made or nature-made. The reality is climate change is increasing the severity and frequency of catastrophes. So we need ways to mitigate that. Another example is actually cyber risk, terrorism. That's another man-made risk. Faulty human behavior, for instance, car accidents, and I could go on. And this would probably generate a list of 20, 25 risks. I'm just mentioning here, 3 of the major ones. So now, how do we fix that? The way to fix it is to understand what tech can contribute to the way we deliver insurance. So it used to be, if you want tech impacts insurance alongside 2 dimensions. One is all around productivity. We can complain a long time that the world is underinsured. I would be very simplistic and a bit provocative here. Why is the world underinsured? Because insurance is too expensive. And I think insurance is probably 2, if not 3 times as expensive as it should be. The reason is that behind insurance, there is a lot of manual work, pen and paper processes. Now, a lot of this can be automated. That's where some application of artificial intelligence can actually get a long way. And that's a first application, if you want, of big data. Without big data, there's no such a thing as artificial intelligence. So it's really about past, man as the actor, future, man-machine collaboration, machine-assisted insight generation, and automation. So that's one stream. The other one is about risk pools, their size, and their nature. So one classic risk pool is motor. Now, the risk associated with motor is the risk posed by the driver. Now, as vehicles become more and more automated, you don't need level 5 automated driving. Level 2 or 3 already does a lot. But then you ask the question, who is liable? The OEM or the driver? And I think quite a bit of this risk is moving towards the OEM. But then the frequency and severity of car accidents is already diminishing. So this risk pool is shrinking. So there's another risk pool also associated to machines. It's called cyber risk. You may not think for a second about it. 5 years ago, nobody was talking about cyber risk. It was just not on the radar screen. Today, everybody is talking about it, and we don't really have a clue how to insure it. But we need to find a way. Why? Because the entire world, economy, society, everything is moving to machines. Machines are vulnerable. It doesn't matter whether it's a malevolent hacking attack or whether it's just the decay of a legacy system. The moment machines break down, they cause a damage. So we need to find a way to understand how to manage that risk in terms of having better system. That's one side. But the other side is also being able to mitigate, and that's where insurance can play a role. So those are 2 examples where the tech transformation is really changing things. So now, at Swiss Re, obviously, we spent a lot of time thinking about, is there a particular technology that can fix everything? Or maybe 2 or 3. And the reality is there is no single technology that in isolation can solve any of the problems. In reality, it's a combination of things that starts from what edge computing is going to be doing to devices. And devices is the smartphone, but it's also the car, because it basically allows to apply, as an example, kind of data analytics in real time without latency. And then you say, oh, okay, but if I communicate with the cloud, it's just half a second. Well, half a second is far too long for many decisions, like when you think about self-driving vehicles. Second one is precision medicine. With data, there's a lot we can do to improve, actually, the likelihood of drugs being efficient, really curing, and so on and so forth. Again, it's all around data. It's around medicine, but also data generated there. 3D printing, I'm not just, people think of 3D printing of physical objects. As we speak, we're already able to do 3D printing for organs. Think about it, what it means. I mean, in 5 years from now, you will be able to go to a hospital and say, I need a new kidney. Okay, come back, give me a few stem cells, come back in 3 weeks, and you get a new kidney implanted without any immunization problems of the like that we have today. Blockchain, I think, is going to be around basically dramatically lowering transaction costs. What the internet has done has been basically lowering coordination costs. Firms that have digitized can grow almost to an infinite size, but transaction costs are still very high, very expensive. Blockchain can change that. So then we have sensors everywhere. That means data are generated everywhere. That data can be harnessed in a way that can be helpful in order to predict and prevent upcoming risk. And finally, automation of repetitive work. That is basically what needs to happen in the back offices. So, and those are combinations, are bundles of technologies. The interesting bit is that nothing new needs to be invented. It's all there. It just needs to be combined and implemented. Now, how do we do that at Swiss Re? We basically define for ourselves 4 buckets. We don't pretend those buckets to be perfect, but we think they're helpful. One thing is that we do is we help clients going through the tech transformations. We have over 3,000 clients worldwide. We're in the business of insuring insurance companies. That's our bread and is our main business. So we do that. Second, we're anything but perfect. We need to apply the same things to our own back office because, I think we don't have the same problems as many primary insurance companies have, but we still have problems that need to be fixed. Third, in technology is basically changing the nature of risk, changing who is going to be the insured. I think there are ways here that we can leverage to get access to risk pools in ways that are very different from what we had in the past. And finally, harvesting the potential of data. We have lots of data. We're establishing a proper data lake, data analytics, and so on and so forth. This is anything but a trivial problem because it comes with a lot of regulatory constraints, and there are not that many platforms that actually allow to be compliant. And I think that's the next earthquake. Imagine if you're an insurance company and tomorrow you get a regulatory audit, and the regulator walks in and asks you, can you tell me who is getting access to which data pools, from which jurisdiction, for which purpose, for how long? Is anybody going to be able to answer that question? My answer is no. Neither are we. I think we will be able probably in 6 months from now. But that is one of the challenges going with big data. Now the question is then, okay, have you understood all this? How do you get access to technology? Excuse me. And our approach has been to say, look, we're not an engineering company, we're an underwriting company. So we go to the places where we think the likelihood of finding the best tech company is the highest. It's not exclusive, but that's where we say basically that's where we do our homework. And we've selected 5 clusters where we are active. Palo Alto is the obvious choice. That's where everybody starts. Then Cambridge and MIT, then Israel, NASSCOM in India, and that may expand to further partners, and then China, where the wave of innovation there is totally astonishing. Now, doing this, we realize that the world is also changing in terms of technology is becoming more and more everywhere a way of life in a sense, and therefore there are more and more kind of technology company emerging all over the world. So, and obviously we will engage through our clients with other places in the world as well. But we thought those 5 places with those, I think, very exclusive set of partners is a good starting point for our journey. Now, how does the engagement with technology work? We see really 3 phases the industry is going through. The first phase is when people go to disruption conferences and come back and nothing happens. Everybody exciting, nothing happens. The second phase is when people do accelerators, incubators, and nothing happens. And the third phase is what we call value generation. If you want, phase 1 is watch it, don't touch it. Phase 2 is touch it, don't use it. And phase 3, and that's what we're trying to implement with the tech transformation, is touch it, try to make some money, because that's ultimately what we're deploying it for. So how do you do that? The way to do that is by developing use cases. When you read a good use case, and always starting from the business side, what is the business problem we're trying to solve, and then can technology help? And the likelihood that technology can help is actually very high those days. So, but when you read a good use case, it always sounds pedestrian, trivial. But writing them is extremely difficult. That's what we've learned. And so we have a process by which we say, look, we start always with a business problem. From there, we develop use cases. Technology can, the technology world is organized alongside what I call technology domains, pretty much like universities, like faculties. But we are organized along the value chain, meaning a deployment of machine learning applications, I need to use the plural because there are many, in actuarial can be completely different than using machine learning in an operation setup. So you need, if you want to cross those two dimensions, and that's where use case emerge, and then you have something concrete you can act upon. So the moment we have found those, we go to the tech clusters we have identified, we go to our partners, those being VCs, accelerators, the places where you find technology, and we post them. And then we have companies, tech companies coming back, saying, I think I can help you solving this problem. So we do a proper due diligence, and then with those that seem to be able to really help us, we do a proof of concept. Proof of concept is usually a $0 to $100,000 exercise. If you want, up until then, doing this process, apart from the people, is actually pretty cheap. You can see a lot, you can select a lot, you can fail fast at a low price. Beyond that, if you find something, and we have some cases for that, we do into pilot and implementation. And having said that, I'm ahead of time I'm beyond time by 10 seconds. Thank you for your attention.